Hello, this is Ronnie. I'm back here with a clip taken from a long video that I just finished to record for my subscribers. I'm leaving the option for my services at 50% off for the first year open, and I'll be providing further details after the clip ends. So if you're interested, please stay on. I'll be talking to you again at the end of the clip. I would like you also to read carefully the disclaimer that I'm going to put up now, so that it is clear to you before you go ahead and watch the video. This is just a standard thing. Okay, we got gold here on the yearly. Gold on the yearly log scale, and you can see the line supporting the rally that many years, yes. And the market doesn't go up there and sits there for several years in order to come down. Very unlikely. Very unlikely. I think it's just a preparation for the shot and the run. Okay, now we can sit and debate about the long-term chart for a long time. I won't go through all the possible options, but just one option comes to mind here. If this is a bottom that was struck in 1999, right here, that delivered a spectacular run in gold, that could be taken as a third wave. That could be taken as a fourth wave, thereby opening the gate for taking this as a 1, 2, 1, 2, 3, 4, 5, 3. Now fourth wave done. Not quite sure. Some would be surprised that I'm considering taking this as a fourth wave. But even if I misread the yearly chart and in fact a fourth wave ended here, which technically is possible, would that be a 1, 2, 1, 2? It's not out of question. Don't forget that this is a log scale. Yes. We'll let Mr. Market decide which wave count is correct on the long term. Right now, it is still looking strong. Although I think that the correction that we have witnessed beginning here, that's the monthly now, may not be over. Yes. I was sharing with you the other day a thought that could possibly cast some shadow for a few weeks, at most 1 or 2 months, concerning the potential rally here. And that idea, if you remember, was what we are seeing in the energy sector. The energy sector is breaking down in what I think is a long-term correction, and almost certainly next year is going to come back. That's going to be part of the huge inflationary wave that will hit the world, waking up next year. I am not party to the idea that we're going to see deflation. No, I think inflation is going to be anchored, and it's going to grow and become really horrible over the next few years. But currently we are seeing big pressure being applied to the energy sector, and often if you study the charts long term, you will see that gold and oil, they are buddies. They go together. They can diverge a bit, but on the whole they do go together. And that is one reason why I would still keep an open mind here concerning the immediate potential for a rally in the case of the precious metals. That's the weekly. Now let's be very clear. We are treating this as the end of the second wave in gold, and that's one. We are calling for a correction, and I said that the correction could extend. I won't be shocked at all to see it going back to 1910. Okay. The key to the entire thing here is to see it coming back strong and basically blasting above this level. That will settle everything as far as I'm concerned. Yes, that will settle everything concerning the wave count. Right now it is clear that that's the daily now. It is clear that the rally that started from here ended ended here. And at this point I treat this as a correction. Okay, it looks like it's going to dip lower here. I was telling you the other day that only a jump above 1980, you see my arrows, they are not from today, would suggest that the correction might be over, but this is not taking place at this point. And we have a few ratios that we could look at. First of all, the Fibonacci for the rally, the correction the correction will see 1910 as a 50% level right here if it goes to the support that we have here marked by the horizontal lines. Okay, we also have possibility to use the ratio of the A and the C. So if we measure the extent of the C in reference to the A starting from the B, where the B ended, we are going to go, just a sec, I'll show you, we have already passed equality, but if we go to the extension 1.618, gold should dip to 1937. Right now it's 1948, so it's not very far. Okay, but nobody guarantees that it's going to stop there. We do have the 200 moving average running right here. Do you see this line? Below that we have the 50. Yes, I do expect it to find support here if the bull is in control. Yes, and it's going to reverse. That's going to be very exciting if it reverses and it runs through 2010. Yes, this could happen. It might diverge from what's happening right now in oil. Here's silver. Now again, that's the quarterly long-term situation here. One reading would suggest that could be a 1, 2, 3. We are still in the fourth wave, or the fourth wave may have ended here, in which case it opens the gate for taking this as 1, 2. Some would say A, B, C, and the fourth wave will prolong for a very long time. I'm not keen on that. If the fourth wave ended here, we're going to go straight up, but it's got to show us, reveal that card that it is up to the task of climbing. And once I think we climb above 30 around here, especially if you do it in an impulsive manner, it'll challenge the previous high. Okay, there is another reading that I'm not very much keen on, but it's not impossible, that we are still in the fourth wave. Yeah, that all of this is just an A. That'll be a B, C, D, so it will basically hang around here, maybe for another 3 months, 6 months, possibly waiting for oil to sort itself out, and then both of them would run up in that in the inflationary wave that I'm talking about. So let's have a look now at the weekly of silver, and it's pretty clear that we have a giant here, a huge inverse head and shoulders. The day it's going to fly through that, that's going to be big news. Right now it's building all the bits and pieces, and if we stay with the bulls at this point, which I don't see any reason why we should not, that's one, that's two, and that could be a tiny one. I'll show you the details in a sec. That's the weekly. That could be one. It run up here and it's correcting at this point. Okay, there is pretty strong support at 22. Ultimate support for this bull, emerging bull, is 21.56. Breaking through that, the wave count will change. Doesn't mean we're going into a bear market, but the wave count will change. Okay, it will become really much more complex. Here's the daily. Now, here's one, but if it ended here, it'll have the same wave count that we have in gold in terms of the time scale. Okay. So I opt to actually use this as the end, but I'm open-minded that the rally might have ended here. And this is not looking like a finished business. Yeah, I think it's going to dip a bit more. Okay, it's not looking like a finished business. We could hang around here for several more days. You see it's coming down in this downsloping channel. Do you see? And again, the key will be to see if it holds support at around 22, 21, 60 or so, and reverses and it comes back in style, impulsive manner. That will be very bullish. You have here, many of you probably noticed that, you have here an inverse head and shoulders, shoulder, head, shoulder, which is part of the bigger head and shoulder. Let me remind you, we have a very big, that's the monthly again. Okay, do you see? Shoulder, head, shoulder, and inside this shoulder we have another tiny shoulder. Yes, all set possibly to propel silver much higher. My website, the homepage is right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily service, daily videos that are preceded by a trial, so you can take the trial for 1 week, and at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit where things are moving, because sometimes 1 week of full price action is a lot and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here, it takes you to the page where it explains to you, you should read that, it explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you are not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you are interested, after you took a trial, you're interested to come back, you can still benefit from the low price for the next full year. But you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos. Okay, so you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now I have here resources. There are chart galleries right here. Chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still the information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it. You'll hear from me. I'm based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you a great trading week. Bye now.